details on the vaccine front. Let's get some more on the markets in the early going here. Alan Nuckman, Chief Market Strategist at Agora Financial, joining us. Alan, always nice to have you with us. How would you describe the tone of the markets right now?
Well, that's a loaded question, isn't it? In the big picture, or just this week, today? Today, I find kind of feeling like we're in the dog days of summer. We've got so many earnings numbers coming out that it's just it's a machine gun of numbers, but it really doesn't matter because no one's expecting anything from this quarter. So we've been able to hurdle above it. And coming into this week, 80% of corporate earnings have been beat. So, you know, it could be another positive tone, but there is a bit of a pause right now. It's hot in the middle of summer, and there's a bit of a pause. We're waiting for the next catalyst. We made new relative highs in the S&P last week. That was a very positive sign, but we need to see another extension of that.
Yeah, but it looks pretty toasty there in Chicago right now, Alan. I mean, it's hot around the country. I guess a lot of people staying cool and maybe doing some stock trading outside of the sun. This is a big week as well for the technology companies set to report their quarterly results. Any takeaways you're going to be watching for from that group?
Well, I'm of the school that I follow price, so I'm not into the fundamentals as much, but they're often been able to surprise. We saw surprises in Twitter last week, and we saw some others. AMD jump when Intel, you kind of saw a chip flip there. So that's been interesting. You've seen the technology sectors kind of stall out after an absolutely epic run. People got to the point where they wanted to maybe find some value and find some, Dow stocks were starting to participate, and some of the S&P stocks that have been left behind offered better value than something that had already had an extreme run. I mean, the tech sector was up 25% in 2020 alone at those highs. Now, let's remember, it's only been, I think, a week and a half since all-time further highs in the NDX, so it's not that far off, and we all know how quickly it can snap back. So let's see what happens. We got Amazon, Google, and Apple, and obviously they've been driving the bus.
Well, we were just having a conversation as well about the stimulus debate in Washington. It feels like some lawmakers coming to grips with how long providing money to hard-hit Americans is going to be needed. I mean, we're having that same conversation here in Canada, but a lot of that has fueled the rally we have seen in gold. Right. How do you think the big picture story for the markets is going to play out, given some of those macro themes that you're dealing with in the U.S. and we're dealing with in Canada and globally? How is it going to impact the tone of the markets longer term?
Well, you pointed out the obvious. It's more money, more money, more money. They keep throwing money at the situation. I'm not saying it's right. I'm not saying it's wrong. It is what it is. So that money flow has fueled the market. So anybody that's tried to step in front of this has been run over, backed up, run over again, and there's nothing left. If you're trying to pick a top or a turn in this, it's not just the stock market. You've got gold at all-time highs. You've got crude oil that had a huge rally, a couple 100% off its bottom. You've got the stock market. It's essentially all assets have had a major move, and that's because of this stimulus coming into the marketplace and the government not letting it fail. So I think the big part of this equation is the U.S. dollar. And I've learned a long time ago to believe what politicians say, even if it seems ridiculous. A couple months back, or I guess it was a year back, when the president said he thought the dollar was too strong, that was dismissed by most people as they're not going to do anything to crush the dollar. But guess what? They've let the dollar fall now to 4-month highs. Look at the move in the euro currency. The euro currency has gone from 109 to 117 absolutely straight up. The dollar's taken a dive, and that's helped every asset class. So anybody that's trying to short anything in this marketplace is the dollar and fighting the Fed and fighting the forces of nature. And I'm smart enough, or I guess I'm not dumb enough, to try and be that guy.
I think it's interesting as you say all that. I mean, we had a fairly bullish case made earlier in the program by Patrick Horan for Canadian equities. The idea that that storyline of some of those big, whether it's industrials or commodity names, that they are set for some global outperformance in the years ahead. I guess we'll see, Alan, right? We'll see when push comes to shove if investors ultimately shy away from some of the Canadian equities in terms of some of the, let's say the Canadian ones or some of the global names.
Okay, if we talk Canada, we have to talk crude oil, obviously. Okay, look at what happened to crude oil. That capitulation nonsense on that delivery day, that was the absolute bottom, and that was the absolute end of the volatility in crude, and it's been nothing but straight up since that time. So if you look at crude in the big picture, we've been trading between 60 and 20 for this last year of trade. 40 was a halfway point, and we got above 40, and now we filled in that gap from February. So it looks like the next move is 50 when it comes to crude oil. Obviously, there are a lot of energy stocks that have been hurt badly, and the risk-reward now is more in their favor. It was more in their favor a couple of weeks ago, but it's still very much in their favor if you compare that to tech stocks. Then you get into all the metals and mining stocks. The risk-reward is still in their favor compared to a lot of the other stocks in the marketplace. So I think Canada is in a good position here, and everybody's looking for maybe stocks or sectors that haven't already run to offer that better value because, again, the risk is less to buy something that hasn't had a big move so far.
All right, Alan, thanks as always. Alan Nuttman of Agora Financial joining us with his take on the stock market. We will continue to monitor the markets coming up, and we talked a little with Alan about that